Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for February 8th, 2010. This is Patrick Ceresna. As always, we start off with the S&P 500 using that spider exchange traded fund symbol SPY, and Thursday and Friday brought another bout of aggressive selling on the downside. We were always talking about that support resistance band around the 109 level. We kind of expanded it a little bit to just talk about the high that came in on Tuesday, and more or less what we want to emphasize is that that was a consolidation zone. And last week we were been talking about that if the market made some sort of a shallow retracement, that a very quick drop toward the 103, 104 zone was very possible. At that stage, we are now coming to the completion of that move. And the fact that we had such a reversal candle coming in, we may in fact have seen a swing bottom, but again, it depends on how Monday morning will actually open up. We are looking for some sort of support levels to come in here, so we believe that this short-term swing down is coming to its maturity. Now, over the bigger picture, we think we're going to be going through a multi-month market correction. We're just thinking that on the very short term, the sell cycle here is pretty mature on the downside. So at some stage, we're going to be looking for some sort of a signal that the buyers want to take this market back up towards some of the retracement levels, and we're going to be looking for the clues to do that. And we're not anticipating at this stage for the S&P to break down much further than the 103, 104. Next here, I want to take a look at the ISE US Regional Banks Index, which is the symbol JLO. And this index has overall held up very well compared to the broader markets. But the aggressive selling that came in Wednesday, Thursday into the broader market simply couldn't have the regional banks hold their gains in. And we saw a sell-off that dropped all the way down to the 20.5 area, which has now had us adjust our focal point down a little bit more towards the congestion zone down in that area. We have a little reversal candle coming in that came in with the end of day rally that we saw on Friday, so we're going to be focusing on that zone. Overall, this has been nothing but a retracement, and if the market is due for a snapback in the broader sense, then we could see the regional banks attempt to make a push back toward the previous highs, not particularly make new highs, but this sell-off can be slightly undone if the broader markets rally. Next here, I want to take a look at the ISE Index, which is the symbol SIN. This is an index of all those casino, tobacco, and distiller companies. More or less, the selling on Thursday came in pretty hard, reversing this entire market right into the dead center of that 98 to 100 focal point. At this point, we had an attempted breakdown below there, but the shadow on that candle is clear that some buyers came back into the zone. At this stage, this is pretty deep into some selling. In the bigger picture, this is bearish price action, but again, the whole market is overdue for a little bit of a breather, which could snap the markets up from the zone over here. But in the bigger picture, if any snapback rallies reverse back down below that 98 zone, it will open the window for another sell cycle to come in these, and there really isn't too much support down below where this could stop. So we're looking for the support line to hold. If not, the selling could very quickly see a $10 drop in this index. Next year, I want to take a look at the ISE Home Builders Index, which is the symbol RUF. At this stage, we are considering this market to be in a range-bound zone. There's a lot of individual companies that are reporting some news that is encouraging and obviously draws some buyers into them. At the same time, the broader markets are selling, and so we're seeing a lot of very range-bound choppiness in here. Over the last 6 months, we've been contained more or less between that $9 and $10.50 zone, and at this stage, we'd continue to treat this as a range-bound market in the home builder sector until there's further evidence that the market's prepared to make another major impulse move. Next here, I want to take a look at the ISE Natural Gas Index, which is a symbol FUM, and more or less we've also seen a very choppy range-bound action. There's a lot of reasons why natural gas wants to rally as a commodity, but in the same regards, the underlying stocks are feeling a lot of selling pressure coming from the broader markets, and we're seeing now that a 113 to 115 zone is now a formidable overhead resistance level, and the reversals down are now confirming that this is not simply a retracement, but rather confirming that some sort of either a range-bound or topping formation is coming in here. We're going to be watching very carefully in the upcoming weeks and months whether or not there's technical support coming in at this 94, 96 level. But if the broader markets create a sell cycle where natural gas index starts dropping below the 94 level, it will probably sell off like all the broader markets in that sell cycle. Next here, I want to take a look at the ISE Mini FTSE 100 Index, which is the symbol UKX. And overall, we've seen a market that's gone through quite a significant sell cycle, just very similar to what we've seen in the S&P 500, as a lot of these global indices tend to be correlated. And when that 515 to 520 area broke on the downside, we saw a thrust going right down toward the support lines around the 495 to 500 level. At this juncture, we'll be watching whether or not we have further testing on the downside. But just like in the S&P, we are seeing this end of the sell cycle coming to its maturity as numerous measure moves are completing on the downside at the same time as we're approaching some important support lines. At some stage here, we're probably going to bang out a short-term tradable bottom. Doesn't change our perspective that we're probably going to be going through a multi-month correction, but simply this swing lower is pretty mature in length. And we'll be looking for the bulls to make some sort of a retracement in the upcoming week. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.